Investors have put nearly $800 million into MSTU, the 2X MicroStrategy ETF, in just the 1 month since it's been available for trading. Why has this ETF taken off the way it has, Matthew?
Yeah, and we broke 800 million today. We're slightly below that as we're recording. It's been amazing. This is it's one of those companies where I think Michael Saylor is like the Elon Musk of crypto. A founder that's out there, talking about stuff that CEOs typically don't. He's got a real interesting corporate strategy, which is buy a bunch of Bitcoin and hold on to it. And, the people who like this stock are just rabid about it. It's funny, the Twitter algorithm, once you start clicking on stuff, it brings you more. So now I've been brought into the whole MicroStrategy, Twitter sphere. And I mean, these guys, I mortgage my house, I'm buying MicroStrategy. My daughter's entire college fund is MicroStrategy. It's just one of those names that is perfect for a 2X.
So MSTU launched in September, but it wasn't actually the first single stock ETF tied to MicroStrategy to launch. That was MSTX, which launched a month earlier in August. That ETF currently has roughly $500 million in assets under management, which is a lot for the short amount of time it's been on the market, but it's less than what you have in your fund. To me, it looks like the biggest difference between the two ETFs is MSTU offers 2x leverage while MSTX only offers 1.75 times leverage. Is that the biggest difference between the two ETFs, Matthew?
That's a very big difference. I mean, and you've seen as this space has evolved, that 2x matters. I think being the first 2x was important. And I think that's a big determinant. Also, I mean, this is our ecosystem. We talk to these investors, they like our products, they know our products, they know who we are. So I don't think that hurts.
I've heard, Matthew, that regulators are only comfortable allowing 2x leverage on single stock ETFs right now. Do you think that's going to always be the case, or could we see leverage of 3x or more in the future?
So, I mean, rules are always changing. Things are evolving. But remember, there's two pieces. There's what regulators are comfortable with and what you can get done with a counterparty. So even if a regulator said, 3x MicroStrategy is okay, I'm not sure I could get an investment bank today to take on that kind of swap exposure with us. But again, that's something that evolves. So, I would not just assume that the way things are today are the way they're going to be in the future. And we're going to be constantly watching what's going on, and we'll evolve with the market.
You mentioned swaps a second ago. A lot of people who are watching this are used to amplifying their returns with a margin account or something like that, where they borrow money from their broker. How does MSTU get its leverage?
So MSTU gets its leverage with a swap. So we go out to a bunch of different counterparties and say, basically, write us a contract giving us 2x the upside of MicroStrategy. And we have the short side too, MSTZ. We do a swap, give us 2x the short side of MicroStrategy. And it's really as simple as that.
So obviously this type of ETF has the potential to deliver phenomenal gains. I mean, we've seen this ETF nearly triple in just 1 month, but obviously that type of reward comes with a lot of risk as well. Can you talk about that risk? And specifically, can you speak about the daily rebalancing that this ETF does and how that can impact returns over time?
So daily rebalancing and the impacts of that get a lot of bad press. I think the key thing about daily rebalancing is that something like MSTU is designed to give you 2 times the return of 1 day. That doesn't mean you can't hold it for more than a day. What happens is if you hold it for more than a day, what your returns are going to be, you don't know. So it depends on the glide path of the returns. So if you've got something that goes up in a straight line, and you hold it for more than a day, chances are your returns are going to be better than 2x. If you've got something that goes down in a straight line, then your returns are probably going to be worse than you would expect in a 2x. So, you can certainly hold on to it for more than that. And I wouldn't say that's a risk. It's just you don't know exactly what your returns are going to be. But if you're bullish on MicroStrategy and you're right, you're going to be rewarded on an MSTU versus buying the underlying most of the time.
Do you have a sense of who's buying this ETF? Is it mostly retail investors?
My sense on all of these things is you've got a mix. You've got a lot of retail guys, a lot of self-directed retail. I think you also have a lot of kind of hedgy fund, smaller shops that are just attracted to volatility and just go into things that are volatile. And because I don't think you get 800 million just from a bunch of smaller retail guys. I think there are some smaller institutions in there as well.
Now, I know, Matthew, you're a neutral fund manager and you have a long version and a short version of this ETF. But do you have an opinion on MicroStrategy, the company? Do you have an opinion on where it's going from here?
So I do, because I have an opinion on Bitcoin. I am right now a Bitcoin bull. I think what is going on with the Federal Reserve, who I think is behind the curve again and making a mistake, I think is positive for Bitcoin. As we're taping this, it looks like Trump is winning, let's say, the election. And my sense is that he is a more Bitcoin positive candidate. So, I'm bullish on Bitcoin at the moment and own it personally.
I think that's a good place to wrap it up. Matthew, thanks so much for your time.
Thank you.
All right, there you have it. Matthew Tuttle explains how MSTU works and why investors are piling into the ETF. Now, if you're watching this video, you probably either own MSTU or you're interested in potentially owning it. I'm not here to tell anyone what to buy or what not to buy, but if you do buy this ETF, you really need to understand how daily rebalancing works and how it can impact your returns. If you want to learn more about that, check out my video on NVDL, which is another really popular leveraged ETF tied to NVIDIA. Like Matthew said, with these types of ETFs, sometimes the math works in your favor, sometimes it doesn't. But I'm going to push back a little bit on what he said about how MSTU will do better than MicroStrategy stock as long as the stock goes up. Sure, that's probably the case in the short term. For a stock like MicroStrategy that's extremely volatile, the math could work in your favor for a while. But if you hold long enough, inevitably, it's going to work against you in a big way. And you could see a situation down the line where MicroStrategy stock is higher than it was on the day that you bought MSTU, but the ETF is lower. We've seen this with other leveraged ETFs, and it's most likely to happen with leveraged ETFs that are tied to highly volatile assets. And MSTU certainly fits that bill. So be very careful about holding this type of ETF for an extended period of time. This is only for someone who has an extremely high tolerance for risk and who has a plan for getting in and getting out of the ETF. I hope that helps, and catch you in the next video.